This indicator measures pressure, bullish pressure versus bearish pressure. This is one of the most powerful indicators on TradingView that can effectively help you know if the price is gonna go up or down. I will teach you a trading strategy based on this indicator, so make sure you watch this video until the end and let's get started. Before I add the indicator, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, on TradingView platform, here click on indicators and search Red K Trader Pressure Index, this one, which is an editor's picks indicator and written by Red K Trader. Alright, this is the indicator, and as you can see, it is added here below the chart. As I said, this indicator measures bullish and bearish pressure in the market. As you know, in the market, there is always a fight between buyers and sellers, which on one hand, buyers push the price up, and on the other hand, sellers push the price down. So as a trader, if you can determine at any given time who is in control, so you would be able to say with high probability which direction the price is likely to go. This indicator considers this fact to help us know who has the upper hand in the market, buyers or sellers. This is actually what this indicator is trying to tell us. Before I start explaining the indicator and how you can interpret it, I am proud to announce that I have published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, let's see what we have here. This green area shows bullish pressure and the red area shows bearish pressure. So when we have green area, it tells us that we have more pressure from buyers, and when we have red area, it tells us that we have more pressure from sellers. We have also a white line here, which is net pressure, which is bearish pressure subtracted from bullish pressure. You can consider it as an average pressure in the market. Unlike the green area and red area that are above zero, this white line is moving above and below zero. When the white line is above zero, there is higher buying pressure in the market, and in times that the white line is below zero, there is higher selling pressure in the market. Alright, now I want to teach you a trading strategy based on this indicator. We need to change the settings so the indicator will be optimized for our trading strategy. Here we go to the settings of the indicator, and here for the average length we set it at 30, and then here for smoothing we set it at 15. Here for control level 30 is okay, and here we turn on pre-smoothing and we set it at 5. And finally, we go to the style tab and we remove the net pressure line because we don't need it. Alright, we're done with the settings of this indicator. And now we need to add another indicator which we're going to use it in our trading strategy. So here again, we click on indicators and we search double MACD. We add this one, SK double MACD, which is written by Circ-Res. Alright, we need to change its settings. So here we go to the settings of the indicator to adjust the settings for our trading strategy. This indicator gives us two MACDs, one with longer length and the other with shorter length. We use the MACD with longer length for identifying longer term trend of the market, and we use the MACD with shorter length for identifying shorter term trends or momentum changes in the market. We need to change their settings. Here for the longer MACD, here for the fast length we set it at 100. For the slow length, we set it at 200, and here for the signal smoothing, we set it at 50, and then here for the shorter MACD, here for the fast length, we set it at 34, for the slow length, we set it at 144, and here for signal smoothing, we set it at 9. And finally, we go to the style tab, and here for the shorter MACD, we change the appearance to histogram. Alright, we're done with the settings of these two MACDs. And now let me teach you how you can find accurate buy-sell signals by the help of these indicators. Alright, as I explained, this indicator gives a measure of buying or selling pressure in the market. Green area shows buying pressure and red area shows selling pressure. Here we have a dashed line which is at 30 and this is our control level. we are interested in times that the green area or red area go above the dashed line. When the area passes the 30 level, it shows that now we have considerable pressure in that direction. And here we have two MACDs, one with longer settings, which is the one at the back, the one that changes color between red and green. We use this MACD for longer term trends of the market, and the other MACD has shorter length, this one in the front, the one that changes color between orange and blue, and we use this MACD for midterm trends or momentum changes in the market. In this trading strategy, in the first step, we start with the longer MACD. As I said, it is used for identifying longer term trends of the market. When it is red, the market is trending down, and when it is green, the market is trending up. So the point of histogram changing can be a signal for starting of a new trend. In the next step, we look at the shorter MACD. This MACD should also be above the center line. In fact, because this MACD has shorter length before the changing point of the longer MACD, earlier than this, the shorter term MACD is already above the center line. But at this point, when the longer MACD goes above the center line, at that moment, we want the shorter MACD to be also above the center line. The whole of this situation shows that in a longer term perspective, we have a signal that shows the trend has changed from downtrend to an uptrend, and in a shorter term perspective, the midterm trend is also up, and we have upside momentum in midterm perspective. The final confirmation is bullish pressure. We should have green area and it should be above 30. When we have three of these situations at the same time, the starting of an uptrend is confirmed. In other words, the buy signal here is confirmed. So in practice, we could enter a long position at this point with the stop loss below the previous swing low and profit target at risk to reward ratio of 2. This was a long position setup, and now let me teach you a short position setup. In the first step, our focus is on longer MACD. When the histogram goes below the center line and it becomes red, it is a signal that probably a downtrend is forming on the chart. When this happened, we want the shorter MACD to also be below the center line. This situation shows that in a longer term perspective, we have a signal that a downtrend has probably started, and in a shorter term perspective, it is also supported by this MACD that the midterm trend is also down. For the final confirmation, we want bearish pressure. Here in this indicator, we should have red area and it should be above 30. When we have three of these situations at the same time, the downtrend is confirmed. So in practice, we could enter a short position at this point. And you can see that this trade was also a profitable trade. All right, let me show more examples so you better understand. Following this downtrend, you can see that here the longer MACD went above the center line and became green, giving us a signal that probably an uptrend is starting. The shorter MACD is also above the center line, so supporting the formation of an uptrend. And here we can see that we have a bullish pressure because the area is green and it is above 30. So the buy signal here is confirmed, and in practice we could enter a long position at this point with the stop loss below the previous swing low and profit target at risk to reward ratio of 2. And you can see that this trade was also a profitable trade where the price advanced up to this point. Alright, moving on the chart. Here you can see that the longer MACD went below the center line and became red. The shorter MACD is also below the center line, but look at this indicator. It doesn't show bearish pressure with the condition that we need. So this sell signal here is rejected, and you can see that it was a correct rejection. Alright, here you can see that the longer MACD went above the center line and became green. The shorter MACD is also above the center line, and when we check this indicator, we can see that we have bullish pressure and the line is above 30. So the buy signal here is confirmed, and in practice we could enter a long position at this point, and this is also a profitable trade as you can see. But look at this sell signal here. You can see that the longer MACD went and became red. The shorter MACD is also below the the center line. And when we check this indicator, we can see that the area is red. So we have bearish pressure and it is also above 30. So we have a confirmed sell signal here, but this was a false signal as you can see. The price didn't turn down after this. And this is the important point that you must pay attention. This trading strategy doesn't give you guaranteed signals, and losing positions are always part of the game, and you need to manage your risk. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategy that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it now, because without a proper risk management, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.